Welcome back to the bunker. I'm your host, Jason, and this is our small account swing trading challenge. We're going to go over my portfolio tonight, and I'm going to go over one of my big winning trades from the last couple weeks and kind of break down how we entered the trade and how we are managing the trade. So let's get into it. Thanks for coming back. All right. Well, as I've got them sorted by P&L, and I'm going to sort them by DTE now. AMD, I put on a earnings trade like a idiot. It definitely does not go with my strategy, but sometimes you just, I guess, want to lose money. For lack of a better word. So we'll see how that turns out. It's got 3 days, but I did a iron condor, hoping that the price action would stay in the middle of my zone. And as we can look, I'm at 385, and I believe we skyrocketed after earnings up to 412. Well, we'll see if it comes back. If not, tomorrow we may take it off for maybe a loss of $100. I don't know. I was actually trying to get out of it before earnings. I got a sick feeling in my stomach that it was going to go crazy, and it did. For a little while, it stayed in that range, but it didn't. So anyway, sometimes you take an earnings trade. Sometimes you pick high side or low side. I picked that it would stay around where it was. It didn't happen. Nvidia. This one has been surprising me. I sold a put credit spread. Let's go to the out of the hourly and go to the daily on this one. So let's see here now. Let's go 1 month. We were in a bullish uptrend. We had our order flow. This is the reason I put this one on. And we've been up for the months, up for the weeks. And we set our new 20-day high, and we pulled back. And I was looking for that little circle to go back up. And when I put on the day I put on the put credit spread, it dropped 10 points and it dropped another 10 points. So we're a little in the hole on that one. You can see by the little identifier we're in the money on that one. We may get to experience, like we did with Oracle, the other side of the put credit spread real strategy that I employ. I've got 10 days, and I think earnings, that's right before earnings. We can look at that real quick on the table. Earnings is the 20th, so it'll expire essentially 3 days before that. Hopefully we'll get a run up. A lot of times, the stocks in the hot sector will get a run up right before earnings. AMD did, and AMD is in the same sector, and they're in the chip market, and they reported that AI chip demand is at an all-time high, just like their stock is. So maybe we'll get a little move in our direction. We'll see. No guarantees. That's why we just manage our risk at entry. That's the key to managing our risk. I didn't put on any more on this one or any more risk on this than I do normally anything else, and we've got a strategy even if it does go against us. So NXT, that is an energy stock. That's one of the sectors that's been hot along with technology. Actually, energy's been pretty solid all year. I put credit spread on this one. We're sitting at the 105 strike, and if we look at the chart, 105 is way down here. So we've got a lot of support on this one. Let's bring that back out like 3 months. See what we got. There we go. We've changed sideways. That's one of the indicators of why I put on a put credit spread versus buying shares. A lot of times I like it where it's actually stair-stepping the market, or building structure, let's call it, where it'll make a higher high and higher lows. This case, we made a higher high, then we made a lower low. That's not it. That's a wide channel. Then we made a higher high again, and then we come down and make a lower. This one we made a higher low, and then we come back. We did make a higher high, and we did make a lower low. That's kind of bearish. That means you're going down, and that means you're going down. So the channel actually went down. But we put on our credit spread way back in on the 27th. That's April, May, January, March, April 27th. Right around here where we're doing our U shape. Like I said, that's that Darvas box. We set a high, didn't make a new one for 3 days. Made a low, didn't make a new low for 3 days. There's our Darvas box. We're looking for a breakout with volume here. That's if we were going to buy shares. But since we've been trading sideways, I went ahead and when we were at the bottom, sold a put credit spread and at my 0.2 delta. We're going to ride that one out. Earnings are on the 12th. And we've got a 80% chance statistically of winning this trade, making a little money. I sold it for, what is that, $1.35. We're marking at 95. So we're looking hopefully in the next 10 days to make $1.30, which would be $135. That's what we're doing. Normally, like I said, the weeklies, bi-weeklies, I take it to, let's go 75% if we get there, but if we're closer to expiration, I will take those to expiration because that's part of my wheel put credit spread strategy for the short ones, 1 week and 2 weeks. GIS, you probably, it's like a broken record. This one was at a 2008 low. I was looking for us to get a rebound. We really have just been trading sideways since we got there, a little bit down. Earnings is 2 months away. They'll be at the very end of the earnings cycle. Heck, almost the start of the next one for the big names. We were on the 42. We're underwater on this one, but we'll continue to roll it out if we can for credit until hopefully it moves our way. If not, we'll own 100, or I think I put a put on this one, so not a credit spread. We'll own 100 shares of it, and then we'll have to probably sell calls against that. Palantir, they're waiting for the software sector to rebound a little bit. We're not in the money here. We're at 135, and we're right at our strike, it looks like. We've been tailing off on this one. When did I buy that one? I've had this one days open. I have had that one for about 40 days. Wow. I've had that one for a while. We're 10 days from expiring. We may look to roll this one out here pretty quick. May have to look into this one. When's our... Oh, I know I haven't because we're already past earnings. When was earnings? Earnings was, what, last week? I think earnings was last week. And I did not take that off before earnings. And we saw a little bit of a bounce that night, but we've continued to push down. So we're going to... Oh, it's trading sideways. Well, we may look to roll that one out in time tomorrow. Maybe hold it for the next week, get closer to our expiration. But we'll manage that one, see what we can get. If not, like I said, another opportunity to do side B of our put credit spread. The Tilray, once again, that's the one I got into with my brother. We have seen nothing but that thing go down. Even we got a nice bump on that one when they made the announcement that they're recategorizing the marijuana, so all the pot stocks got a little bit of a pop. We're going on Tilray. There we go. And of course, just like any of these penny stocks, if it's under $10, I consider it a penny stock. You live by the sword, you die by the sword, and that is a falling knife, my friends. Sword's just a big knife, right? And now we're below 6, and we may wind up owning some of that. I've got 3 puts, so we may own 300 shares of that one. And I've got some long-term calls out at the end of the year. Hopefully we'll get around 12, and we'll collect some money out of that one. We'll see. We'll never know. That's a wild card. Oracle is a trade. That one, I owe y'all a video on the Oracle trade. But right now I've still got my monthly on this one going out. We're right at almost 20%. The stock is making a really nice rally. There's our U shape. Would be another time if we weren't already in it to put something on. And the way this thing rallied, what would you be, 20 points? We were down at 161. We did 20 points in 3 days. Daily, 1, 2, 3. We were down here, and we'd done 20 points. So based on how we do around here, if we see some volume and this thing break out, I might throw some shares its way. It goes about 8, so 16. About 20 shares would be my max on that one for $100. Yeah. We may do that. I'll keep that in the back of my head. IGV, I put this one on the other day. I was going to tell you about it and actually recorded a video, but there was an update on OBS and it reset my audio, and I did not think to look. So I had no audio. It's a nice video of me just talking, but you couldn't hear me, which probably was a good thing, right? Because it was like 45 minutes. It was way too long for what I was planned on doing. I was going to walk through how I scanned for stocks over the weekend, but I never even got to it. Oh, it's better. It's probably lost in the ether than in between your ears. So IGV, this is a ETF of the software. Like I said, software, I think you look on the weeklies. Let's go to the weekly, and let's go out a couple years. You can see we're at a major weekly low here. Once, twice, we were looking for a bounce. We've gotten it started. I waited till we kind of broke out the previous, looking left, the previous weekly resistance. Bang. So we're looking at trying, there's not much volume here. We kind of went up through it, down, up through it. We didn't really trade in this range. So there's usually where we traded right here is where the next big volume of resistance is going to be. So we might see about a $20 drive in this one. And I went ahead and bought 15 shares, and its ATR, average true range, is 6. So 12 would be my, and then you would divide that by 130. So basically, well, that's essentially 10 shares. I'm at 15. So I was 20. Well, I'll have to check my calculation. I could have swore that 20 was going to be my. I'll check that one. But we're in it, and we'll wait, see how that goes. Hopefully, we can get a nice little run up to 100. That would be a nice winner. The wheel, this is where when I take my profits each month, I throw it into this ETF. The wheel ETF is basically a gentleman who does the wheel strategy on a larger scale, and he averages about 15% for the year of return rate, and they pay out a quarterly dividend. Lately it's been about 60 cents a share. Even then on Christmas we got like 75 cents a share. So what I like to do is, if I've already made my profits, I'll take that money until I have 3,000 total. I'll throw it in here, collect some premium or some dividends on my money, and that way I'm continuing to make an investment. I'm compounding my winnings, and I continue to maintain my risk structure as is until I get about 3,000, and then I'll add another position, so that I'll up my goal for the week as well as my risk. It'll be 1% of 16,000 instead of 1,000 or 13,000 like it is now. So that's my control, based on my bank. I'm banking it in that one. BG, we finally got a breakout on this one. Like I said, I actually added 5 shares to this one today. We were looking for a breakout of 8 from our entry, and 8. This was basically 128 plus 8 is 36, and we got ours at, we're in at 124. That's our average, sorry. 124 plus 8 is 132 right there. Bang. So right when we hit our 1 ATR, we'll add to our position. If we go up another 1 ATR, that's where we'll add another half of our half. So then our final basically will be, I'll round up 18. Yeah, be 18 on that one. And then we'll see if we can get a nice continuation. And like I said, our goal is try to be 3x. And then we'll start trailing it by probably our 20 SMA or our 10 day. This is the slow, well, it's been moving slow, even though it shows that it moves 8. Oh, I'm on the weekly. Well, no wonder. 8 seemed like a lot. I thought so too. Let's go back to the days. Yeah, okay. Now, 4:30. So we got in late. Really, we've gone 2 ATR, aren't we? So if we've gone 8 points, I should have be fully vested. So we may not add any more to this position since we've already moved 2, and we pulled back today after we broke out. So we'll see how this acts right here. And I'm on the dailies. So this is the 10-day moving average, which is 122, which is kind of let's see, 8 from this, and we closed at 130, which would be 122. So 2 ATR or the 10-day low, that's pretty much right where we'd be in. So that's most likely where my stop will be right there. Very good, very good. But we're in the money. We're heading in the right direction. That's good. That's good. TG Max and companies, we still haven't seen this one go anywhere. We've kind of just been drifting down. Once again, this was a stock. It's been going up. It had order flow. It had done the U-shape in the past. We broke out with volume and we pulled back. We got in there, trade around right here, looking for that coil back up to break out, and we didn't get it. So this is one that I actually put shares on instead of doing a put credit spread. If we were doing a credit spread, we'd be doing pretty good. But since we did shares, we're down a little bit, but not too bad. About $30, about $40. So not too bad. We'll see how it goes. They can't win them all. Like I said, as long as you're trading your setup consistently, you're gonna. I win about, like I said, about 60% of the time, and that's pretty good. You're gonna lose 40% of the time. That's just statistics. There's not much I can do about it. No strategy is perfect. 5. This is another one that we got into. Had bullish order flow, like I said, just like the other ones. We set up our Darvas box. We looked for a breakout. We didn't really get it there. Did again, and then we did break out, and then we pulled back. I got in around right here, and we went back down at this resistance and they got to this resistance level back here in the past. It says, "Nuh-uh, we're going to go down." So we'll see how that goes. We'll manage it. But like I said, that's why we only put in half of our max amount in the first trade, so we don't lose a full trade. We don't lose a full 130. We only lose half that, and we let the stock prove it to us that it's going to continue to be bullish and move in our favor. So, and then SNXX, this is our baby, and this is the one we're going to go over a little bit tonight. We're going to show the full spectrum of this trade. Now, this trade, we did our same scan. We scanned for order flow. I scanned for a new high of the 20-day high, and then it's pulled back 0 to 5% of that. And then when I look at the chart, I'm looking for that Darvas box to form at our breakout level. And then I will determine if it's in a bullish order flow, which this one had already broken out once. So I think I'm just looking for continuation on this one. It pulled back down, so instead of selling a credit spread, I went ahead and bought shares in this one. Plus earnings was coming up in the near future on this one, and memory stocks have been a hot commodity, and so that's why I made that decision. And then we broke out with volume, and we have continued to go up, and I've been trailing that. But the one thing about this one is normally I'm on the daily, I would have my stop around the 20 SMA, which is this yellow line here. This is the 20 EMA, and this is the 9 EMA, which I kind of like to have a cloud EMA just to show trend and to see how strong the trend is. Some people use the MACD, though that's just a moving average as well, and it shows well, actually the MACD is down here. It shows the difference between the two, but you can see this basic hypothesis. But sometimes I'll just like it all on one chart instead of having the MACD here. I keep the MACD here to kind of a reference for other people to show momentum, but I really get it from the cloud here with these EMAs. So this is the 9 EMA, and I always really like to see how consistently a stock that's in bullish order flow really bounces off that 9 EMA when it's really trending and going the direction it wants to be. I wonder what the SPY looks like on that one. Let's go ahead. Look at that. Look at, almost does the same thing. Very pretty. Comes back, touches that 9, and keeps on going up. Very nice. Very nice. What about QQQ? How about that one? Same thing. Follows that really nice and pretty, doesn't it? And how about the IWM, which is a Russell? Russell. See, we kind of danced back in it. Of course, the Russell, it probably did earnings first, so that's probably kind of a disruption to the trend. And we're starting to get into the other stock names. What about the Dow? What is that? Let's see. I can do the futures. What's it? Why? Actually, let's go to the Tasty default. I think it's right at the top of that one. Yeah, that's the ESF NQ. This is the Dow, isn't it? Yeah. Oh, look at the Dow. See, it's starting to hit it too, just like the Russell. Well, that may be an indicator of something. These are kind of your, the old school, the boomers back in the day, and the babies, the baby boomers. The Russell, which is your small to mid caps, they're kind of dancing not as strong as well. So maybe the markets are shifting towards the bigger stuff or not, or the risk on assets instead of the risk off. I don't know, but that's interesting that 2 of them are back down into our EMA cloud, while the other 2 more risky assets are still above it. That might be interesting to monitor. But anyway, back to what I was babbling about in the first place. This one took off so much that usually what follows is a big pullback down. Usually almost comes down as fast as it goes up. So rather than me lagging as much as I normally would on a stock, I have accelerated this one and just stuck with the 2 ATR, 2 times ATR, which is 26, would be 26 points off the high. So we got 164, take 26 from that one, so that would put us at the 40, 50, or 30, 38? No. 10, 26. That would put us at 40, and then take 6 would be 38. So I should be at the bottom of this candle here now. Oh, we must have pulled back or something. So I will move my stop up to around 138 to stay 2 ATR behind this one, and that way I can just lock in profit. Maybe that's what I did. I did sell 2 more shares at the very top today. Well, not the very top, but pretty close. Just to kind of close out. But we're already over, and I'll show you that. We're already over my 3X target. And we can look at that right now. So what we were trying to do on SNXX, this is the full trade so far, but I got 2 more out. So we've already put in, let's do SNXX. So we've already locked in, these are realized gains, 344.69. So I say, hey, that's not 3x our risk because we're risking 130. But since we've put our stop loss at 138, that would be $240 essentially, that's still ready to become if worst case and it pulls all the way back. So you take that $240 and you add it to this 300, that puts us at what, nearly 600 at profit. 500 something, yeah, somewhere there. So our essentially 3x of our risk is going to be 130, 260, 3, 3, no, 130, 60, 90, 390, 390. Yeah, so 400. We're almost 1x past that, and still going. And we'll ride it out. We got 2 shares left. We'll see how that goes. But that's kind of the power of the swing trade. Like, you have a consistent way of identifying stocks you're looking for. You have a consistent way of filtering out the other ones. And you have a consistent way of a pattern that you're looking for, or a setup, and then you trade it. And then by the probabilities, if your strategy is sound, these could be potential results. Sometimes you only get 1x, sometimes you only get 2x, sometimes it's break even, sometimes it's a loss. But the whole point is, if you've got a system and you stick with the system, that way you're systematic and it's unemotional, which really makes trading easy and fun. But like I said, as the disclaimer says, this is for entertainment purposes only. Future, I can't predict the future. Nobody can, so I don't know how it's going to perform. I just know the probabilities have worked in favor of me in the past, and that's why I continue to stick with the strategy. So, well, that's it for me tonight. If you want to see me, if you want to see me live pick a new stock to put in our portfolio, we're kind of like, we need one more position on to be at our max. So I'm going to be looking for something to put on for probably an expiration next week, probably an ETF until we get through most of the earnings. But if you'd like to see that, put it in the comments. Like, subscribe. Those would be great for the algorithm, because it just thinks I'm talking to myself. I got a couple people that chime in and ask questions, but for the most part, I'm just looking to build a community of us working folk that want to find a way that we could still introduce ourselves to the market, learn a little something, and take our small accounts and help them grow. So, and that's what I'm here for. That's what I'm doing this for. So, until tomorrow, take care now. Bye-bye then.